Hello, hello. This is Dan Paulson. I have with me Warren Laube. Warren is a friend of mine, and also you were actually one of my first clients way back many. I still probably had dark hair back then. You probably still had hair back then.
I had hair.
But Warren, why don't you tell me about yourself and why I've got you on this call?
Well, we are talking about the payroll protection program that is coming out. That was part of the CARES Act that was just passed last week as legislation. And I have been in banking for a little over 30 years. Took a little break from it, but am now jumping back into the fray with a new bank. And we've been trying to figure out how we're going to help out all of our small business clients and with this payroll protection program, loan program, and I've been sharing some information with Dan. So here we are.
All right. Tell me what you understand about the program so far.
Well, the program was, like I said, part of a larger piece of legislation. It's $350 billion that was authorized in this legislation, and it is primarily to be used to keep people employed. This doesn't say this anywhere, nobody said this, but I believe that they are doing this so that we don't overwhelm the unemployment system with unemployment claims. So they're trying to keep people employed, at least for the next 8 weeks. At that point, obviously that gets us to June 1st. And if you've been following anything on the news, then hopefully we can have the country opened up at some level beyond where we are right now, where people can return to some normalcy. But this is meant primarily to keep people employed. And just a real high overview of it is, if you're a small business, 500 employees or less, you can apply for a loan through the SBA. Actually, you have to apply through a bank, and the bank will submit for you on their behalf. So you have to find a SBA certified lender. And if you go on the SBA website, they'll match you up with a lender. But nearly every bank is an SBA certified lender. And once you submit the application, you have to submit to them a couple of forms. You have to prove your payroll for the last 12 months. And if you haven't been in business for 12 months, that's okay. Just submit as much as what you have. They take an average of what your payroll has been over the last 12 months. And you would qualify for a loan for as much as 2 months of what your average 12-month payroll is, plus 50% of that. So if it was $10,000 a month, you would get $10,000 for 1 month, $10,000 for another month, plus another $5,000. So you would qualify for up to a $25,000 loan. That doesn't mean that you get all $25,000 because you still got to have, you would still have to show what your overhead is. And even if you did get it all, it potentially wouldn't all be forgivable. So for example, if part of that payroll was you and you were making more than $100,000, you only get to qualify up to $100,000 of it. Anything over that isn't forgivable. So there's a lot of little catches in it too that you got to be aware of.
Yeah, and that seems to be what most people are confused about, what they're asking questions about right now. What sort of criteria, because when we talked yesterday, you were mentioning that it's kind of a bank-to-bank situation in some degrees. I mean, there's some things that are required by the government, but it's somewhat limited on what they're expecting. It's more of what an individual bank might ask for as far as what qualifies.
Yeah, so the documentation to be provided is the SBA is giving to certified lenders what's called delegated authority, which means that bank has the authority to approve you on the spot based upon the documentation that you bring in. So the key thing is to probably work with a lender that you have a relationship with so that they understand your business a little bit. And they're going to believe you a little bit more, because the lenders are taking a little bit of risk with this, not a ton of risk, because this is a 100% guaranteed loan by the SBA. So they aren't really taking any credit risk unless they don't document things properly. So for example, if you're if you're an employer, you have an IRS form 940, 941, and if you bring in the last 12 months worth of that, that usually will get you over, meet the documentation requirement that most lenders are looking for. The other thing that they would be looking for would probably be like a roster of employees to make sure that you have less than 500, and to see if there were any employees who were making more than $100,000. So they'd probably be looking for those kind of items. The other thing they'd probably be looking for would be like maybe the last 3 months of a P&L, because the other items they'll be looking for, because these are qualified expenses under this loan too, would be utilities, rent payments, interest on mortgages, general overhead expenses. Those can also be covered as covered expenses that would be forgivable with this loan.
Got it. So what do you see as making something forgivable? Is it all going to be forgivable? What's going to be the hoops that a business is going to have to jump through to have this magically go away whenever they decide to make them all?
Again, we're making this up as we go along. So
right.
What it is at the end of the process, so the documentation that you're bringing in on the front end is sizing the loan. Okay.
Right.
You will have to provide documentation after at least 8 weeks, because this is supposed to cover 8 weeks of payroll. So at the end of 8 weeks, you bring in, here's what my actual payroll expenses were. Here's what my actual overhead was. And if those are qualifying expenses, there's that second piece of documentation. That's what makes it forgivable. On the front end, the documentation is to size the loan. On the back end, you will provide what you actually spent the money on, and that's what will make it forgivable. What's really kind of cool about this is if you've already laid off employees, you can call them back. As a matter of fact, you should call them back, put them back on the payroll. Even if you're going to pay them to sit home, the government will give you the money to have them sit at home.
So that's one way that they can actually keep their employees without having them come into work when there might be no work to do anyway.
Correct. Just call them back, put them back on your payroll, because this loan you are supposed to use this money within 8 weeks after origination. So if you get the money on today, you've got 8 weeks in which you're supposed to spend that payroll money. And if you're getting it for all these employees and you laid them all off, call them all back to work. Pay them for the next 8 weeks, and hopefully you can put them back to work right after that. If you have to lay them off again, I guess that's what you're going to have to do.
Okay. All right, good. So I had a number of questions when I posted this out on Facebook, actually. I'm going to kind of read some of them off here. Maybe you can try to help answer them. And some of these are actually coming from accountants that are getting involved in this. Sure. First one, hey, Dan, I think we are all engrossed in this bill. I'm interested to any opinions as possible, and forgiveness. We talked about that, payroll protection. Let's see, getting fixed info would be great. Okay. S corporations. Does it matter what type of corporation you have to qualify for this?
No, doesn't matter. This is all supposed to be tax-free money. Matter of fact, sole proprietorships also qualify. Contract workers, contract laborers, and sole proprietorships, though, I believe are supposed to wait until April 10th to apply.
Got it.
So they're the first ones to go through are other than sole proprietorships.
Got it. Okay, perfect. What is forgiven versus not forgiven? You kind of answered that, but is there anything that if they were to apply for this that wouldn't be forgiven, or is it just the fact that on the back end, if you don't show that you spent the money where you were supposed to spend the money, then it remains a loan? It
remains a loan. Now, keep in mind, it's not a bad loan either. The rate's 0.5%, 0.5% for the unforgiven amount. So it isn't like, you're going to really take it into shorts. It's still 100% guaranteed. So the loan documents you sign are uncollateralized, and you do not have to guarantee them. So if you're a corporation, an S Corp, an LLC, you don't have to sign a personal guarantee. Matter of fact, you can't sign a personal guarantee for it. So you don't sign the personal guarantee, and the loan, once it, if for example, you get a $25,000 loan and at the end, only 20,000 of it was forgivable, and then you have a $5,000 loan to whoever the borrower was, whatever that entity was, that still has to be repaid, but it's at 0.5%, and the terms on it, I believe, are 10-year amortization with a 2-year maturity. And again, there are no payments during the first 6 months. The first 6 months worth of payments are deferred.
That's nice. That'll hopefully help free up a lot of cash and keep a lot of people in business.
Right.
What is the process for applying, EIDL or PPP?
Oh man, I tell you what. Okay, so the PPP loan is what I'm talking about, and
Okay.
that application is there's a link, and Dan, I don't know if you want to share that link to that U.S. Treasury.
Actually, I already did.
Yep. If you go on there, there's an application there. So the process for applying is you take that application along with whatever documentation you need to the local bank, and they will throw it into the SBA portal, and God willing, we will not crash that portal on Friday morning.
Wait to see.
Now the EIDL loans or the EIDL loans, those you have to apply directly to the SBA with, and there's a tremendous backlog on those right now.
Okay. All right. You kind of answered this, but maybe you can expand on it a little bit if necessary. How much can a borrower borrow?
Depends. It's typically going to be 2 months worth of payroll. So if you average your last 12 months, and if you haven't been in business for 12 months, and it's just, the best effort you got for the last 2 months, plus 50% of 1 month. Or what they say, it's 125% of each month is what you'd end up with.
Got it.
Basically.
Plus any overhead expenses that qualify. Now,
well, no, those are supposed to be covered by that other 25%.
That's covered by the other 25%. Got it. Okay.
Now, one of the things that's interesting about this is that if you have contract laborers that you are paying, that can be included in your payroll.
Got it. Okay.
So if you have a consultant, for example, not that I know any, who's a contract laborer.
You can throw me back on if you want.
Yeah. You can include
and if you just want to throw me back on to get more money, as long as you can pay me, I'm happy with that.
Yeah.
Now with, how do they determine the amount? Okay. And then can you actually apply for both the EIDL and the PPP if you choose to?
The answer to that is yes. However, you can't apply for the expenses, the same expenses under each one. So if you're getting an emergency loan, an EIDL loan, or you've already got one to cover expenses, you can't reapply under the PPP loan. You can refinance it. You can refinance it, which makes it potentially forgivable at that point. But I got to tell you, that's going to be a little bit of a few hoops. So if you have not drawn down the money yet on an EIDL loan, and you want to do the PPP one, I would do that one first.
First. Okay. All right. So if anything, treat the EIDL loan as a secondary option, not the primary option.
If you're borrowing money to cover payroll and overhead, get the PPP loan because it's forgivable.
Yeah.
I think the term that I heard is which is kind of funny, is it a loan or is it a grant? Well, it's a groan is what it is.
And it's because it's by the government, it might make you groan by the time it's all said and done, especially the banker side of things. Yeah. Another question. So we've answered that one. Let's see. I'm scrolling down this list and it just keeps going and going and going, but we've answered some of them already. More than one business. If you own more than one business, how does that work? Can you apply for each business? Is it one size fits all, or what happens there?
So here, there's a little bit of gray area here because one of the questions that's on the application says that you will not get a loan for another. You aren't going to get another loan from the PPP for this. So the SBA has affiliated rules. So if you own, let's say, 2 businesses and the ownership on them is identical. If Dan and Warren are 50-50 partners on 3 different businesses, those are affiliated businesses, and you would consolidate those from an employee head count. This is the way that I understand it.
Okay.
So the way that I would apply for it, because the applications are not real convenient on this, but the way that I would apply for it, if I was filling it out, I would fill out 3 applications. I would check on there that I am applying in a couple of them, and I would attach them all together and indicate that you have other businesses that are owned identically and are affiliated, and you're using, but you don't have more than 500 employees between all affiliated businesses.
Got it. So the thing that just pops into my head is maybe somebody who owns real estate. They might own rental properties, and each rental property is under an LLC. They might have workers, but the ownership of the LLC is all identical among each one. So this would be a case for that.
Yeah.
All right. We covered that. We've covered that. How about not-for-profits? We've had a few questions about that.
Not-for-profits qualify for this, as do, like I said, sole proprietorships and contract laborers. This is something that typically has not been in there. But if you're a not-for-profit, a private not-for-profit, then you can submit an application and get your overhead covered also, as long as you have employees and you have the payroll.
Good deal. Is there any specific thing that you need to do differently as a not-for-profit versus a for-profit business?
Not on this. I mean, the only thing that doesn't matter to you is there's quite a few tax breaks in here for for-profit businesses, but obviously if you're not for profit, that doesn't matter to you.
That doesn't matter.
Yeah.
Okay. What else do we need to know about this? What should we understand? What's going to be the best approach if you are interested in applying for one of these loans?
Is to get in early and get your documentation ready. Obviously, bankers are going to be absolutely overwhelmed with the volume that comes through here. $350 billion sounds like a lot of money. However, when you're talking about however many small businesses are out there throughout the country, it's going to go fast. They estimate, the last estimate I heard is that they expect all of that money to be used up in 2 to 2.5 weeks.
Wow.
So get your application in early, get your name in the queue, and get it on there. There's also a lot of folks, there's a lot of churches that are looking at this, a lot of other nonprofits and religious organizations, which would all qualify for this also, that are looking at these loans. So I would, if this is something you're interested in doing, I would get it in early. Make sure you communicate well with your bank. Credit unions can also do these loans as long as they are a certified SBA lender. And there are certain fintechs that also can do this. And I'm sure if you're on LinkedIn or you're on Facebook or anything else like that, they're going to start advertising like crazy to get these loans out there.
Right.
But these should be pretty simple to do. The application is incredibly easy. The documentation you have to support, supporting documentation looks incredibly easy. And again, like I said, if you're a certified lender, they have delegated authority. So if you go to a lender who knows you, I would think they would be able to approve you pretty much on the spot and fund it as quick as they can get the documentation done.
Okay. Are there any specific questions that they should ask their lender, or they should ask a lender if they're not comfortable going maybe back to their current one? What should they be asking to kind of educate themselves or make sure that they've covered all their bases?
Well, the first thing I would ask them is, had they even heard about the program? Because if they haven't heard about the program, they're already going to be too late. And this is a first come, first serve with a limited cap on this stuff. So when this money's gone, it's gone. You're out. So if you don't have somebody who's ready to go with this thing early and quickly, then this is money that could get soaked up pretty quick. I have a feeling it will go really fast.
I would agree with you. Now, you did say that sole proprietors would be filing later. Should they still apply now, or do they need to wait till?
I'd put it in. Even I think what I read is that they were going to say they were going to start accepting applications on the 3rd, which is Friday.
Okay.
And they were saying that if sole proprietors were or contract laborers would be after that. So, but if you were a contractor or whatever, I'd put it in anyways. I mean, what's the worst that can happen? They'd say just take a step back. But
Okay.
But I would put it in sooner rather than later.
Right. So the most important thing is, if you're interested in doing this, act now.
Yep.
The worst that can happen is you either don't qualify or, whatever, it's not going to work out. But
Yeah.
if you don't apply now, the chances of you getting anything go down dramatically over the course of the next 7 days, I would say.
Yeah. And I would guess that we're gonna see the SBA's website get totally swamped. There's going to be a lot of glitches over the weekend, and I would guess because the banks have to produce, or the banks or the financial institution has to produce the loan docs and get those signed. So they're probably going to be pretty well swamped too. Their loan processing staffs are going to become pretty well swamped too. So I would just say patience, patience. So
any concerns that the banks will not work this weekend to get this through, or are you pretty confident that everyone's going to be all hands on deck right now?
I would suggest, I would say if they're not working, then they're missing a boat. I think this is a great opportunity for community banks to support their communities. I think it's a great opportunity for a financial institution to actually work with their local economy and get stuff done. So most bankers who I know are gearing up for this and trying to be ready. Good. So they can manage the workload.
Excellent. Good. So go back to your community bank and see if they can help you out, right?
There you go. And if they can't, you can always call me and I'll do what I can to help you out too.
Well, why don't you share with people? How do they get a hold of you? Because I'm sure there are people that are going to reach out.
Well, if you would like to reach out, you can reach out to me via Facebook, obviously, or LinkedIn. Both of those, I'm pretty easy to find on there. You can always email me also at warren@wlaube.com, WLAUBE.com. And I will, I've got kind of a group of people who I've been keeping up to date on what information is available, when it's available, and stuff you can share with your bankers. I know quite a few of them have shared it with their bankers, and their bankers have called me and said, hey, where do you get this from? And, when you're locked in your home on a pandemic, I got a lot of time to scroll around on the internet and find a lot of information. So
I'm glad you do. I've been quite busy on other meetings, but now you had mentioned, and we should clarify with this is still kind of a fluid environment we're in as far as figuring out what is all going on. So what is true today may not be true tomorrow, or may not be true by Friday. Is that correct?
Correct. And that's why I say, keep watching for updates. I'm sure Dan will continue to update stuff. I'll continue to update stuff. Just continue to look for updates. And like I said, start rounding up information, financial information, employment information, payroll information. Have that stuff. We know you're going to need that because that's how we're going to size your request. Beyond that, the application looks like it's final. And you can go onto the U.S. Treasury website that Dan has shared, that link he shared. I shared it on mine a couple of different times. That's there. Take a look at that application. Fill it out, have it ready to go. And when it's ready to go, fire it off to your banker, email it to them, call them today and say, hey, listen, I got all this stuff ready to go. I'm going to email this stuff to you so they're ready to go. Because on Monday or Friday morning and all weekend long, I got to imagine people are going to be submitted these applications.
That's right. That's right. Warren, anything else you want to close with, or have we pretty much covered the gambit at this point?
No, I think we got a lot covered there. There's a lot here, but thanks for putting this together, Dan, and hopefully everybody stays safe and stays healthy.
Well, thank you for being bored sitting at home and doing all the research on this, because a lot of people have been confused about what this is actually going to cover. So I think this clarifies a lot of those top points there people are worried about. So thanks again. I appreciate it.
Hey, my pleasure. Good to talk to you.
All right. Take care.
See ya.